This is why you should sell your fucking house and go and rent your home.
So I understand this model implicitly. It's just that I've chosen not to buy property and leverage it. And rather than that, I rent where I live and I buy shares because there's tax effectiveness on the dividend income, no operating costs. And I think it's more simple.
What will make this next crash significant is that because all of these retirement accounts, governments, and other more serious entities are now invested, once this crashes, this is going to unwind the entire global economy.
The lessons haven't been learned. They're adopting rubbish into these retirement accounts and it's going to absolutely destroy returns in those pension funds and countries. But the more it's adopted, the worse it's going to be. So I wholeheartedly agree with what's going to happen here. It ain't going to be pretty.
Hey, if you drive a paid-off car, you're not driving a beater, you're driving a blessing. You do not realize how freeing not having a car payment is until you don't have one.
I 100% agree with that. It doesn't mean you have to drive a beater. It just means I'm Lloyd James Ross, 7-figure investor and entrepreneur, and I've helped thousands of business owners and professionals turn financial stress into success. If you're stuck in old money habits, overwhelmed by investing, or unsure where to start, this is for you. I'll give you the mindset and strategies to take control, grow your wealth, and achieve financial freedom. It's time to make your money work for you. All right, now it's for some fun. We do some fun reaction videos here. So it's going to shoot me some reels. I'm going to react to them, make you laugh, give you some value. Let's go.
20 boo-boos in 1 month. Stop! You're choosing this over your child. You're choosing her over him. What do you think of 20 little boo-boos in a month?
This lady bought 20 Labubus in a month. So Labubus is by a company called Pop Mart. They get these mystery boxes. You buy them. I don't know how much they are, over $100 a box, I'm not sure. And there's a line the other day at the shops and tons of people buying them. I'm like, oh, my nieces are starting to talk about them. We caught onto this trend a few months back. It's been going on in China for a while. I've watched the stock for a bit. What's interesting is this lady has bought and spent money on 20 Labubus in a month. Alternatively, we went out and we bought the stock of the company that compares to Labubus. So that's a little different way to play it. Would you prefer to own the company or the Labubus?
Because you're purchasing $1,084.99 in the last month alone.
I was using it for Pop Mart purchases.
On a Costco card?
On a Costco card. This guy's just slaying her. It's interesting, isn't it? The way that they set up the business is to make it addictive to buy the Labubu. And now it's a trend. And these trends can go on for a long time and create massive overvaluation in the company, which is why we put a very small amount into the business in China. So there you go. Bang. Fun. I'll let you know how it goes.
If you buy a house now, I am predicting you could lose as much as 50%, give or take, in the coming years.
Are you truly saying that people's homes are going to fall by 50%, half the amount they're worth today?
U.S. already fell. Average home 34% in the last downturn.
Okay, so in America right now, without a doubt, almost all states are falling, and they're falling fast, and there's a housing oversupply. In America, it seems to be like it's going to be a double-digit fall, so 20. It looks bad, and so I would say in the States, yes. In Australia, can't see it growing. Don't know if it'll collapse, unlikely because of the immigration policy. But if that comes off the ball and the demand is a lot less, then you could see some catch up of supply. And we could see, depends if people don't want to hold the hot potato. It depends on a lot of things. It depends on the interest rate going up or down. It depends on the immigration policy and depends on supply. So those three things in Australia look pretty solid. I don't think it'll crash here by 50%. But in America, without doubt, it looks like it's going to happen. Here, we probably just won't see a lot of growth.
The Australian dollar has tanked. Our reporter Luca Itamani looked into why and what this means both for your online shopping habit and your group chat's trip to Bali. So since US President Donald Trump announced his...
All right, the Australian dollar, she's saying this is 59 cents. This would have been a little bit of time ago because it's now recovered to 65 US cents per Australian dollar. And the reason for that is because the United States, it looks like they're going to reduce their federal funds rate. So Donald Trump is pushing hard for Powell to reduce the rates right back down. That would be bad news for their currency. US dollar would fall. The Australian currency against the US would rise and would probably go beyond 70 cents up to maybe 75 cents per US dollar if they drop rates in America. But it also depends on what we do with rates here. If we drop them here, we drop the value of the Australian dollar back down. So we'll see what happens. But this was done a little bit of time ago when it was 59 US cents.
Crypto is going to cause the next Great Depression and ruin the global economy. So Bitcoin recently broke all-time highs at over $120,000 per coin, and Trump is about to make it legal for people to invest their retirement accounts into crypto. Now, we're at the stage where even governments are investing into Bitcoin and other cryptocurrencies, and I believe we're about to head a whole lot higher. So some of you are going to become fabulously wealthy, but the vast majority of you will either hold too long or buy in too late.
Yes.
What will make this next crash significant is that because all of these retirement accounts, governments, and other more serious entities are now invested, once this crashes, this is going to unwind the entire global economy.
It's kind of what happened with the bond market in 2008. Banks were buying these toxic assets, these mortgage bonds that were just rubbish, and they were being packaged up and sent and bought by whole countries in sovereign wealth funds. And Iceland went broke. Ireland almost went broke. Spain almost went broke. Greece went broke. All these countries went broke. It was very bad. And you can see the lessons haven't been learned. They're adopting rubbish into these retirement accounts, and it's going to absolutely destroy returns in those pension funds and countries. And the more it's adopted, the worse it's going to be. So I wholeheartedly agree with what's going to happen here. It ain't going to be pretty.
I'm 35 years old. I'm sleeping on a mattress on the floor at my friend's place because it's impossible to get a rental or it's way too expensive. And my only options are sleep in my car, sleep on the floor at my friend's house, or try and find a room in a share house if I can afford it, if there's any available. Knowing my luck, I'll end up with some fucking weirdos. How are those my only options? How are those the only options of many Australians right now? Before anyone says, you're 35, why don't you own a house? I did own a house in my 20s. I owned a house with my ex for 6 years. We bought at a good time in 2012. Wow. Then we split. He paid me out. It wasn't enough to then go and buy another property. So I think I'm just going to have to start applying for rentals, like one-bedroom apartment.
I wonder how much she got from when she bought her former spouse bought her out. It would be interesting to know. You can only guess at this point. If they bought well, maybe they made $200,000 net out of it. I'm just guessing, minimum. And so maybe she got $100,000. Now, if she had invested that into some sort of high yield index fund, it would have paid her about $7,000 a year. And that $7,000 a year would have helped to pay for some of her rent. And so I wonder now what she does for a living. If she can't afford a single studio rental on an income plus some investments, what did she do with the money? You could have bought a studio back then for that price or close to that price. Back then in Surfers Paradise, they were selling double studio or 2-bed studios in the middle of Surfers for $150,000. Now, banks don't lend on the small studios, but she could have borrowed the balance from a friend and bought whole place there. So I do wonder what mistakes she made in the past that have now forced her to probably potentially live in her car at 35. So it can happen, but it's easier when you're single without family. Imagine families. Just quickly, if you're ready to take control of your finances but feel stuck on where to start, I have a solution. My book, Money Buys Happiness, simplifies investing and wealth building with practical steps to help you achieve financial peace. Get your copy via the link in the show notes and let's get your money working for you. Now back to the episode.
I'm going to tell you this, my entire company, my entire team, if you don't have a six-pack, you don't work for us. No, I know. It's called, everybody say standard.
Standard.
How about we raise them?
Ooh.
How about we raise them? How about you guys quit getting civilized and you guys quit settling? You know, there's some people in this room that said, I would sue my...
It's funny, I saw Andy Elliott, had lunch with some of his team when we were in Vegas earlier this year, and he was at the ClickFunnels event. And yeah, savage dude. Has very high standards, obviously, people's bodies. And what's interesting about that is if how people treat their bodies is how they treat their bank accounts, how they treat... So it is about standards. That's why if you see someone who's in really good shape, they've got good discipline. And it's a very good way to spot what they're like in other things. Because as you do one thing, how you do one thing, how you do everything. So what he's saying is if we can't raise our standards in our six-pack, how will we raise our standards in our business, in our relationships? So I agree with that. Am I all about the bro thing and the whole I used to be more, and I think I've mellowed. I think I watched too much Goggins. So you don't have to be brutal, but what it is a great message to say, hey, raise your standards in your body, your bank account, and your relationships. And I think that's a great message to send to anyone, to raise your standards. For sure.
This is why you should sell your fucking house and go and rent your home. So, the term rent vesting, here's how it works, and here's why you should do it so you're less broke. Now, in this scenario, you're a single, you're a couple, you're whatever you are, You earn $200,000 a year. That could be two $100,000 salaries. That could be one $200,000 salaries. That could be you and your two partners earning $75,000 or whatever it is each. Now, you have a deposit of $200,000 in cash. You have two options. The most traditional option, which is this side of the board,
home equity,
is you use your $200,000 to go and buy a $1 million property. You get an $800,000 mortgage and you get a 30-year loan term. That loan costs you $58,000 out of pocket. The difference is it's an investment property and we're getting a 5% rental yield.
In 2025, you probably could still get a 5% rental yield somewhere in, I dare say Jack finds those, but it is a bit trickier. But it's trickier because the interest rate is it's almost, for property investment, could be even 6%. Certainly late 5s. So if you're getting a rental yield of 5, but the interest rate is higher, it's costing you more in interest to have the property. I know it's a little bit less because of the deposit. So you're probably going to find the property investments negatively geared and cash flowed. You do get some tax deductions from that, but you can, without a doubt, rent in a place and buy in a place that's going to be more bullish on the growth. And there are more tax incentives if you've got a high income with not a lot of tax deductions. So I understand this model implicitly. It's just that I've chosen not to buy a property and leverage it. And rather than that, I rent where I live and I buy shares because there's tax effectiveness on the dividend income, no operating costs. And I think it's more simple. So I have actually adopted this thinking into my own personal finances, but not with property, with shares. But I can without a doubt understand what he's trying to say here, and he does it in a fun way. I don't think getting a big personal mortgage for your PPR is a good idea. Yeah, for that reason as well. I agree. Fun guy.
Are Labubus an economic indicator for a recession? Besides being super cute, the rise actually ties into a larger pattern, how consumers adjust their spending in uncertain times. In economics, this is called the lipstick effect. It basically says that during a recession or an economic slowdown, people just stop buying big luxury items like cars, designer bags, or vacations, but they don't stop spending altogether. Instead, they shift into smaller luxuries, emotional purchases, tiny treats that feel special without feeling reckless.
Wow.
Like the $20 strawberries from Erewhon. You guys know exactly what I'm talking about. Or in this case, a Labubu. These dolls hit the sweet spot. It's just indulgent enough to feel like a luxury, but not so expensive that it triggers guilt. And when people feel financially anxious, they downsize their luxuries and not their desire for comfort. And if you really want to spiral, there's also rising tariffs on imports from China, as you guys already know. So yes, people are stocking up on all sorts of blind boxes, and this is just one of them. So yeah, this might be a toy, but it's also a micro reflection of how we're coping with money stress, uncertainty, and the need for a little hit of joy.
Yeah, so they're getting their dopamine hit, not from travel, not from planes, the lipstick effect. Never heard of that before, but they're getting Labubus. But I think it's deeper than that. I actually don't think they're choosing to get Labubus. I think they're seduced into getting Labubus because of the company's marketing. Very powerful tactics in mystery boxes, a lot of FOMO and social proof there of other people buying them. And the way that PopMart's marketed these things is like incredible. That's why its stock has 10x in the last, it's actually up 645% in the last 12 months, I think. So you can see their marketing tactics are also hitting people at every level of the economy. It's not just the wealthy, it's everybody, because everybody can afford a mystery box. And it's actually playing on not just the lipstick effect of retail therapy at a different economy, speed of economy, but it's also actually triggering them to want to buy more of them over and over and over again. So I think it's a combination of things that's forcing this Labubu craze. And it can go for a long time, which is why we own the stock.
Hey, if you drive a paid-off car, you're not driving a beater, you're driving a blessing, okay? Now, I get it. You're looking at all your friends. They've upgraded their cars. They've got the 2024 edition, automatic lane switching or whatever. But I'm telling you, comparison is the thief of joy. You do not realize how freeing not having a car payment is until you don't have one.
My dad says that a paid-off car drives better. What's funny about that is that, it does. Like I walk towards our car and it's debt-free and it just feels so good knowing that it's debt-free. And it can just completely destroy you mentally if you keep having to pay a car payment. You feel like you're driving a borrowed car. It's a weird thing. And I 100% agree with that. It doesn't mean you have to drive a beater. It just means pay the car off as fast as you can, if you can, and make sure you're not over-egging the car you get so you can keep up with your friends. Right? And it's just so much more freeing to have a paid off car than to fit in with your friends. It really is. And a lot of the people who have cars that seem to be really nice have borrowed the money to get them. And there's a great saying by Warren Buffett, you never know who's swimming naked till the tide goes out. And we haven't seen the tide go out really since 2008. And when there's a big market panic and a credit crunch and a lot of unemployment, you're going to see a lot of people selling their cars because they actually don't own them. So I agree with that. It's a really good idea to drive a paid off car and over time have a paid off house for sure. All right, so they're the reactions. Hope you enjoyed those. Today, not so many controversial ones, which is good. I agree with a lot of those people. So yeah, be careful of how many Labubus you're buying. Hope you enjoyed it. See you in the next one. Thanks for listening to Money Grows on Trees. If you enjoyed the episode, leave a 5-star review on Apple Podcasts and Spotify and subscribe to us on YouTube so you never miss an episode. And if you're serious about building wealth, make sure to check out the links in the show notes and follow me on all social media platforms at Lloyd James Ross for more. See you in the next episode.